Hello everyone, welcome to Drishti IAS. My name is Saloni Nandkyolier and today let us talk about the increasing liability on the government of India due to the sovereign gold bonds. So let's begin by understanding what do we mean by sovereign gold bonds. So sovereign gold bonds or SGBs are basically government backed securities and they were introduced in 2015 as an alternative to holding physical gold. So instead of buying physical gold like gold jewelry, gold coins, gold bars, people could basically invest in this digital gold in the form of sovereign gold bonds. And because they are government backed, the government was obligated to pay you back. Government offers an interest of 2.5% per annum on the issue price of these bonds. Now these SGBs, they basically helped us reduce our import dependence on other countries. So we used to import a lot of physical gold, especially from African countries, and these SGBs, they basically helped us curb that dependence on imports, because now we were only giving digital gold. People were investing in digital gold. We do not require physical gold to be present in the market. So this reduced our dependence on imports. But the fiscal burden has increased for the government. That is why these bonds, they were basically suspended in February 2024. The last tranche was issued in February 2024 and after that they have not been resumed till date. In fact, the government is also planning to discontinue the scheme altogether because the fiscal burden or the liability of the government is increasing a lot. So let's understand this with the help of data. Currently, the government holds 126 tons of gold with it in the form of these sovereign gold bonds, and the current value of gold is 1241 CR per ton versus the average issue price was 422 CR per ton. Can you see the difference here? 422 CR per ton was the average issue price and now the current market value has increased to 1241 CR per ton. So the liability, if you multiply these two, will come out to be some 1.5 lakh CR. Because the gold prices, they have shot up significantly. In fact, a 35% increase in gold prices has been seen. Because of this, the fiscal burden on the government of India has increased because the current value, when multiplied with the total amount of gold that the government holds, gives us a significantly high amount. So the fiscal burden on the government of India is increasing. The liability on the government of India is increasing because the gold prices are increasing significantly. And if we talk about the historical perspective here, then in the financial year of 2017-18, the government's liability from SGBs was only 6,664 CR versus what do we have right now? 1.5 lakh CR. This is increased by 930% over the past 7 years. This is a huge jump. It increases a lot of burden, fiscal burden on the government of India because this is government backed, so the government is obligated to pay you back. It's a good news for the investors because the gold prices are shooting up, but even after that the investors are not redeeming these bonds because they are anticipating that the gold prices are going to go up even more. So the redemption is not happening at a very high pace here. It's a good news for investors, but it is not a good news for the government of India. That is why the government is even planning to completely discontinue these bonds. But then as an implication, it might further increase our import dependence again on these African countries. Now only time will tell what the government is going to do, whether these bonds will be discontinued or not. For that we'll have to wait. But that was all for today's video. Now let us practice a question for prelims. Please attempt this question. Which of the following statements is incorrect for sovereign gold bonds? And your options are SGBs were introduced in 2015, B. SGBs are not government backed. C. SGBs help in reducing our imports of physical gold. And D. Gold prices have seen an increase of 35%. SGBs were introduced in 2015. SGBs are not government backed. SGBs help in reducing our gold imports of physical gold, and gold prices have seen an increase of 35%. Please attempt this question and provide the answers in the comment section. And in this festive season, please enjoy Diwali with your friends and family. We'll meet after the holidays. Thank you for watching.
For more informative content, like, share and subscribe. And do not forget to press the bell icon to get the notifications.